AMC stock. It's American Multi-Cinema, I think. This is like the twin sister of the GameStop GME stock, sort of. It's not exactly the same chart. We'll take a look at GME also, but the AMC chart is a cool bubble trend line with a lot of bull flags. It's great for call option entries. So this will be AMC and a call option sort of tutorial, talking about like where to strike, time durations, like where to enter and exit calls. Yeah. All right. So yeah, this is Brian Lewis with MMT Investing, and please smash the like, share, comment, subscribe, and turn on notifications to help me out. Yeah. All right. So I had a request for AMC, which I should have done an AMC video, but I haven't, and so I'm gonna do it. Okay, so this one, I'm going to do the AMC chart, and then I'm going to talk about call options, because this is the exact type of chart where call options absolutely crush it. And I guess, yeah, I'll take a look at the S&P, because I because I did add to my shorts, even though it was probably a bad move. I did it anyways. All right, so um, okay, AMC. So the GME chart is like the bubble meme chart right now, and AMC sort of is following it. Like these pops and AMC are roughly following the GME chart, but that chart is crazy as hell. The AMC chart is pretty standard. It's like a super standard bull flagging trend line, and it's staying on top of it, which is awesome. And you can see, like, you push through the trend line and pop. You flag sideways, you push through, pop. Flag, pull through, pop. Okay, so this is the general bull flagging chart, and so you can bull flag 2, 3, 4, 5, 6, 7, 20 times. You can keep bull flagging. At some point, you'll push through and it won't pop. Like it will collapse. So this is where call options are so awesome because, like, when you're flagging into support, this is the way that the flags usually look. Like you'll be flagging kind of sideways on a trend line, but you'll pull down into support. You'll pull down into support, and then you'll flag through support. Bang! Then you pop, right? You're flagging, you're pulling down, flagging, pulling down, right? Pop. And so for call options, the uh, like you have to pay for the time. So sideways is bad, really bad for call options. Like 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 days sideways. Like if you have a 2-week call option and you lose a week sideways, like that's most of your money. Like you lose a ton of money. But if you can enter a call option when you're pulling down to support, when you're pushing through support, you're timing the market. And if you can time the market and get your call option right before a big up move, you don't have to pay for the time. And then you get an exponential gain. And then, um, yeah, and then good luck because who knows where you're going up to. It's really hard to like time it and get out of it. But usually what happens with a flag, like this is a sideways move, that's usually awesome. Um, if you're if you're flagging sideways above support, that's a dangerous time to enter a call option because usually you'll just flag boringly out sideways into support. You definitely want to do it at support, not above support, right? But so I mean, it's blowing up vertically, right? And then it pulls back, and then it'll start rolling over sideways, and you'll get a lower high. Get out. That's when you get out of your calls. And then it'll usually kind of flag back. It'll usually bounce a couple times, but let's look at a couple of these. Yeah, so this first flag is just jumping on support, and like you don't really know where support is. And then this big flag is nuts, like that's ridiculous. But after the second flag, then you can draw a support line and you kind of know where stuff is going. And so as you're flagging sideways, as you're pushing through support, this is a killer area to get call options. And I'll just, I guess, talk about the call option strategy that I use. Short dated calls can get you big gains, but they're way risky. So like the way that I like to do call options is I get my support line, right? And I call under the support line. So, I mean, say I'm at $3, right? And I want to strike at 13, like way out of the money strike at 13, right? That's a crazy strike. It's super dangerous strike, but like if you struck at 13 with this week call option, you're striking like way above the trend line, and that's really dumb. But like if you hit it, like you can make a ridiculous 1000x gain or something crazy. But the idea, the way that I structure my calls is when I find the trend line and when it's flagging into the trend line, say like right here, like this is a straight sideways flag, like right into the trend line. This is a great spot for a call, but like I won't do like a 1 week strike like up here out of the money. Like that's insane. You strike underneath the trend line because you want to finish in the money if nothing crazy happens. Like, so I mean, say this is what, 1, 2, 3. Say it's like this is 3 weeks. So like if you want to strike, say you want to strike at 26, like at the top of this thing, that's a great place to strike. But like you don't want to strike at 26, like this week. You want to strike at 26 out here lower than the trend line, and you probably even want more time than that. So like if I was going to strike at 26 from this location here, 26 strike is really aggressive from 5. That's insane. But it's reasonable because we hit it. Like that's an upside target, and it looks like we're trying to go there. Okay, so but the time length on the option is super important, and also when you get into the option is important because you're paying for all this time while it's going sideways. You're just losing money as it goes sideways, and if it goes down, you're destroyed. And that is really the good thing about a call option, is basically you're just paying for the option. So if it completely collapses, all you lose is your option. But if it goes up vertically, then you're getting like an exponential gain on 100 shares. So like you can get a 10x gain up or a 1x gain loss if it falls out. So it's like a 10-to-1 bet. It's great. It's freaking great, but you have to strike under support and you need extra time. So like if I'm striking from here and I want to strike at 26, like I'll draw this, trend line out to 26, right? Boom. Okay, and that's what, April 15, right? So I want to strike at 26 like twice this amount of time. I'm going to strike in May. I'm going to do a May strike at 26, right? That's the basic idea. But you also have to look at the call option ladder, which is like as you start getting a little bit out of the money, like it's exponentially awesome. The prices are great. And then the farther and farther out of the money you get, like you get less and less and less gains and way more risk. So you have to look at the call option ladder. Say, I don't know, say like if you're striking at the money here, say it's $100 for the option or whatever. And as you start getting out of the money, it's like, oh, okay, it's $95. It's, $90. It's $85. It's $80. As you start getting out of the money, say it's like $5 increments. But as you get farther out of the money, now it's like, oh, $3 increments, $3 increments, then $2, then $1 increments, then 50-cent increments. Like as you're pushing farther and farther out of the money, it's like a terrible deal, right? So you have to look at the price of how far out of the money you actually want to go based on the call option ladder, and you want to strike. You don't need to strike like at your target price. Usually the idea is strike lower than your target price wherever the call option ladder has a really good strike price. So like say I'm trying to strike at 26, but the call option ladder starts becoming a bad deal at 10. Like, okay, well that's the deal. Like I want to strike at 10 then. I want to strike at 10. So if I'm striking at 10, then just look at the trend line and double, triple the amount of time. So like I probably still want like a May strike, and I probably want a $10 strike or something like that. Like, and then you'll get exponential, you'll get the like 10x kind of exponential gains to 10, and then it'll start falling off. The exponential gains will be less and less until the option just starts looking like 100 shares. And once you're like way in the money, it's just the same thing as like holding 100 shares. But like you've made exponential gains here, now you're safe. It's like now you're holding 100 shares, and you can just trade out of it. So yeah, this is the AMC chart, and where we are now, and this is a pretty cool chart. So see, we've just done some little flags and bounced, and little flags and bounced. So I would say on the AMC chart here, we are pushing above. Okay, so this is a really cool one here because let me go to like 5-minute chart or something. Okay, this is a cool one because we kind of flagged up to a floor and now we're bouncing on top of it, right? So this looks super bullish. It looks super bullish, like we've kind of pushed above the top of this little flagpole, right? But the most likely scenario is we have a line. Let me just like paint this thing. Like say we have a line here. Oh, what is that? I don't want that. What is that? Okay. No, I don't. No. Okay. Okay, so it looks like we've kind of picked up maybe this trend line. We haven't like flagged around it that much. So the normal thing, like we got our vertical move and then it started rolling over. So my kind of exit strategy for call options is like when it rolled it, I sold it. So you're getting vertical moves. Like these sideways flags are okay, but once you've pulled back and you've rolled, that's the end of that call option because you're at a risky spot above support and you can pull vertically down to support. Dangerous. Usually you'll flag, but when you're flagging, you'll pull down and test support. Flag, pull down and test it, right? And that's what it looks like AMC is doing here. And then very rarely, when you're above support, and this is maybe the case this time because it just broke to new highs, and it looks like it might be like bouncing. This is a difficult spot. So like if I was calling on this, I would probably exit most of my positions on this kind of. As soon as you start rolling sideways and flagging, it starts getting dangerous. But when you start pulling back, it's like, okay, that's probably the end of that call, and it's probably just going to flag back to support. And you don't want to hold the option as it's going sideways. You lose money the whole time it's going sideways. And if it pulls back, you lose a lot of money. So, yeah. So it's like exiting calls. Like it's it's kind of hard to time and see because you have no idea what the upside move is going to be. But usually it's a vertical flag stick, and then you do like a chop, pull, right, and then you start flagging. Like that's the normal kind of move that you'll see up a bubble trend line like this. This one's weird though because it's like breaching highs. So this thing might take off. Like if I still was holding calls here, I would probably have exited most of them. I might still hold some here, but this is a dangerous spot to buy a new option. Like this is like when do I get out of my options, not when do I buy them. You buy them at support. Or even better, if you get a sideways kind of flag as you're pushing through support, boom, that's when you get the vertical move. Right, so that's kind of the idea with the call options. This is a very dangerous place to enter call options. And of course, like if you're on a bull trend line, you would never want a put option. And then if you're selling the options, this is a completely different strategy. But this bubble trend line is where call options make sense, and that's the idea. Is you need to find the support trend line, and yeah, that's the two spots to get calls. Let me go out to like the hour chart again. There's like two spots that are great. What is this? Oh, okay. Yeah, there's two spots that are killer for calls. Like, let's look at this first flag. But like on the first flag, you wouldn't know where the trend line is on the first flag. But this, when you're flagging sideways and you pull down to support, you'll usually get a V-shaped support bottom. Like that V bottom into support is a good spot to get a call. But then when you're actually flagging through the trend line, on like this, the sideways flag through the trend line, once you're pushing through the trend line, like that's probably going to pop soon. And that's really the best place to do the calls. And it's not a big risk. Like if you bought shares here, you could trail a stop loss in case it fell out, which is fine. But with call options, like you're betting on an exponential upside. And if it falls out, you basically lose your entire bet. Like you lose the option, it's going to go worthless. But that's okay because you're just paying for the option. You're not buying the shares. So like if it goes up, you're getting 100 shares. And if it goes down, you're losing that option. So that's the idea with call options. This is a bubble trend line. I had the request for AMC, and I wanted to kind of cover. This is a killer good bull flagging chart for call options. So it's less insane than GME. Let's go take a look at GME and see what's going on. Yeah, so GME is freaking crazy. It did this insane bubble, which the other charts kind of followed the bubble. Now GME is like, where is support? It looks like we're like up above support. It's a complicated chart. So it popped and it crashed. It didn't flag sideways, and then it did a bull flag, and it looks like GME is flagging here, right? So I mean, that's like the end of April, but it didn't pop and like flag down to this spot. It hit the previous neckline, then hit the next neckline. Like we're in this neckline section on GME. It's a really volatile and weird chart, and it could fall out to support like down here, which would freak everyone out, but it wouldn't be weird at all. Like that looks like our support line. But what I think it's doing now is, I think we broke into this neckline area, and I think we're picking up sort of a ramp here. And we'll see here in the next day or two on GME if like this kind of ramp support, like this is not a bubble support, it's not steep enough. Like our support line's down here, and this line is not steep enough. Like a bubble takeoff line would be a much higher angle, like this angle. This angle is too close to the support line, and it looks like we're just kind of ramping through the neckline right now. So if we get some more action here, I would expect to pop. And once we pop out of the neckline, like the all-time high will probably give some resistance. Might pull back to the neckline. And then I think GME could explode out of here. But on GME, this is a really dangerous chart because we're up here kind of floating above our support line. And the downside's pretty nasty. It's like, where is it? Like 200, and the downside is like 80. Like it could fall to 80 in like one day. It could just come down here, and it would probably bounce kind of big, but then it would be freaking month or something, and it could flag in here or something. So anyway, that's like the GME chart. So the other meme stocks are not exactly following GME, but the crazy pop bubble moves are kind of at the same time, but they're not the same charts. So yeah, that's like AMC. I think KOSS is another one similar to AMC that has like really kind of standard flagging moves. Yeah, this chart looks very similar to AMC, and it's flagging like right into support now, right? And it's maybe, yeah, like this looks like a great spot. Um, this is a sideways trend line, like right into support. So like 1, 2, 3 days through support, this thing could pop pretty hard. I like this cost chart right now, and I mean this vertical move is freaking insane. This went from $3 to 130, like in like 2 days. That's insane. This KOSS does not have call options. You have to just buy shares, which is fine. So like right here is a great entry, 26 something. So like just buying shares, you could just buy it and then trail a stop at whatever 26 in case it falls out. There's like support at 25, so it could like fall out to 25. If it did that, that would be killer. If it like pushed through support, dropped to 25, like you could buy all of that and also just trail a stop pretty tight. So if it falls farther, no deal. But like the cost chart's cool. All right, let's look at the market and see how my stupid shorting position is doing. Okay, so this is the last couple months on the market. We've been in this bull channel for several months here, and it looked all good until we did this coil. We did this coil underneath the bull channel, and then it's like, uh-oh, this bull channel is not good anymore. We're gonna break this bull channel, and then we smashed it here, and we broke down here, right? And then we started painting this downward trend line here. But these coils, all the coils are on top of the downtrend line. It's just these stabs, just like darts through. That's completely safe. This purple line's completely safe. Then we popped like back to the top. So you see the bull channel, we like hit the top, pulled back, hit the top, and then we pulled back and broke the yellow line, right? And we painted a purple line, down line, all good. Then we jumped back in the channel, bumped our head again. This one is really critical because like these kind of grinding lines on like underneath a level are so cool because you know exactly where to paint the line. But really important here is that we did a little baby coil above this blue line. So that tells me that this chart wants to get above this bull channel at some point. Like it wants to get above it. So that's crazy. Like above this channel is like out, freaking out here in space. 42s, 43, something crazy. Okay, but we rejected, right? And we started painting a down line, and we're just stabbing, all good, stabbing. Like this one's a little sketchy. Now we're coiling under the red line and above this kind of neckline. Okay, then we coil under the neckline. So this neckline is busted, and then we coil hard under the red line. The red line is busted, right? And then we get our rising wedge. So we're on top of support here, and then the rising wedge resistance knocks us under. We coil under, so the rising wedge is busted. Back test the channel and the rising wedge, busted. And now we're grinding under the channel. Yeah. Okay, so yeah, so I did a video yesterday. There was a DXY like dollar crash yesterday, and we had a vertical freaking candlestick which shook me out of my shorts. Like this coil looked completely fine, and then it started throwing a vertical green candle, and I'm like, uh-oh, what is this? So I was checking like the DXY dollar chart, and the dollar freaking fell out. Where's the dollar now? Let's check it out. Yeah, the dollar was throwing a vertical freaking stick, so I got out of my short positions, and then the S&P jumped, and then I'm like, oh crap. Now we're throwing a vertical candle, and now we're like going into the bull channel, so it was looking super dangerous. But all we didn't make it back We didn't make it back up to back test the rising wedge resistance. We just kind of poked our head into the channel, and this is a coil. Okay, so this is a cool thing. So this is a coil inside the bull channel, which means we want to get back into the bull channel at some point. Probably not today, but to the downside here, and this is my dangerous shorting position here, is we have coils saying we want to get into the bull channel. We have a little coil saying we actually want to blow out the top of the bull channel, right? So this upside is here to get into the bull channel and actually blow out of the top of it. But when you do these coils, you need to go the other direction and test the opposite spot. Okay, and so this, the opposite spot here is no joke. Like, we've already destroyed this red line, right? And we have chopped and tested the yellow line. The yellow line looks okay. This neckline is okay, but it's not really support. The purple line is very much support. But we have all of these lines freaking converging at this spot. It's like April 2nd, 35. That's the spot that this thing wants to go to. That's what I'm betting on, and it looks like Tesla and ARK Invest are the two things that want to lead the move down. Like, Tesla bubble looks like it's popping, and ARK Invest, as we rotate out of the tech sector, out of the Qs, ARK Invest is sort of like the Qs, except it's like exponential, similar to the Qs. Let me paint the line. Let me look at ARK and stuff. This is what's happening right now. Like, this is the big short move for this week is ARK Invest. Tesla's more dangerous because Tesla's weird and crazy. It's just an individual stock. But ARK Invest is a fund that looks very similar to the NASDAQ. It looks similar to QQQ, but it's like more exaggerated to the downside. So that's basically the target. Like, I think we can freaking waterfall, like, in a few days through the red line and check this purple line out, and we'll see. I mean, we'll see if we can coil under this. We'll see if we can coil under the yellow, but I don't think we would break down here. We probably like pop back up. Wow, this is a slow mouse. Okay, so slow. Probably double bottom and check it out. Maybe we can stab, but these trend lines look pretty good, and like just one coil here, that's too soon to like go and collapse off a cliff or something. But we could very easily get a waterfall move down, like right now, this week or early next week, just and so that's kind of the short move that I'm looking at. But we're still on the front side of the bubble as far as I can tell, so shorting past here is going to be pretty crazy. Yeah, anyway, most everyone just does long positions. What is happening? My mouse is broken, my internet's slow. Okay, anyway, that's like the look at the S&P move that I see, because we coiled under the red, and in order to smash through the red, we've got to do it right now, because the red line kind of ends pretty soon. Like, it ends in a couple weeks. So if we are gonna get under the red line and test these ones, it's got to happen real soon. And that's like my last short. It's my last short position before we go up, and do this. Man, wow, this is just ugly. I don't know what's happening here. My internet's busted. I think my computer might be dying. Yeah, anyway, that's the idea, the short and the long of it. Where's ARK? Okay, so the Qs, what I was saying is the S&P is kind of bouncing sideways, right, and up a little. If you look at the Qs definitely didn't bounce the like all-time highs. The Qs it's the same bouncing pattern, but it's droopy. It's going downhill, right? The neckline is a downhill line. Like, this chart looks scary, ugly. And so shorting the Qs was my original idea. I'm like, okay, the tech and stuff is going to rotate out because we're getting near the top of the bubble, and tech will rotate out before you get to the top of the bubble. And that's what I think is happening right now. I think we're getting our last pullback. I think we're going to rotate out of tech. But I saw a video on Game of Trades. That's one of my favorite technical analysis channels. And he threw ARK Invest on the screen. And I'm like, whoa, okay. This is even more ridiculous. The chart looks, here's ARK, ARKK. It looks really similar to the Qs chart, except it's even droopier. It's like really dying. It's like super dying. And it looks like we're back testing and rejecting out. And like this could go to 90 this week. I think ARK can go to 90 this week. And so that's what I'm doing. I have like 90 strikes or like 100 strikes, put options, boom and boom, like in this area with way more time. Like I have May, whatever it is, May 16 puts like down to like 90, which is a ridiculous out of the money move, you know, in the middle of a monstrous bull market. That's a really dangerous and aggressive thing. And this is never financial advice. I'm just telling you like my ridiculous move that I'm doing. This is only for entertainment purposes. Anyway, that's my short idea. But I think that's the last freaking short. I think that's the last one. And then I'll show FCX because this is the cool one. I think IWMs are bulling hard, and I think they'll bull to the top of the bubble. But the sector that's rotating in as the big tech is rotating out is like miners and minerals. That's what bulls to the top of a credit cycle, you know, a credit expansion bubble. That's what we're doing. This is a credit expansion bubble. We're going to the top of the bubble, but like the bonds rotate out first, then the tech and growth rotates out, and then you bull to the top of the bubble with, you know, base materials like metals, miners, energy will come in. And so energy may be bulling now. I don't trust it at all, but FCX is Freeport McMoran, and this is just the momentum leader for the miners and minerals, which is my favorite. This is my favorite long position, but I'm not going long now. Like, I think we're going to pull back, and I don't know how far this can pull back. Maybe to 30. Like a big pullback, it could pull back to here. That would be ridiculous. But if the market pulls back and like Freeport comes down to 24, I'll be calling call options like a maniac if it gets down here. Like, I'll bet the farm on this. Freeport's really cool. Let me look at the IWM. It's a very similar chart. It's a little bit less strong than the miners and minerals kind of momentum leaders. But I mean, IWM has been bulling like crazy since the COVID crash. And you can see it's kind of rolling, it's kind of turning, but it's bouncing uphill way stronger than the S&P as we're pulling back on the S&P. The S&P is kind of bouncing in sideways and pulling. This is bouncing uphill and pulling. So this is a strong chart. I don't like it quite as much as like the Freeport. And Freeport's one individual stock. The IWM is like the Russell 2000 ETF, which is like all of the, you know, small caps and like mid cap stocks that are not tech and growth. So like as tech and growth rotates out, the IWM is not going to be rotating out with that stuff. So that is a pretty cool chart. Yeah, so that's kind of the long idea. Like for longs, I really like IWM and I like FCX way more. And now we have, as miners and minerals kind of rotate in, we have like some small mining stocks which are pretty cool. Like I just did a video on LODE, it's load Comstock. So like load, that's the word for like a mining vein or a mineral vein. But you can see this is just starting to flag. Like we've been seeing these bull flags on, you know, AMC and stuff like that for a long time, but like this is just starting to pop, just starting to flag. This could be a really cool stock to do call options on over the next several months. This is probably my favorite kind of call option chart. And like AG is silver miners. This is First Majestic Silver, and this chart is isn't quite set up. It looks like it's just kind of flagging. I don't know exactly where it is yet, but I think this one's going to pick up some flags pretty soon. But this one moves a lot slower, and silver should be pretty good if we're getting inflation and we're getting like a expansion and we're like moving up the bubble. Like for the next 3 months, I think the silver and silver miners should be pretty good. It's like a commodity bull market with inflation is like perfect for silver. All right, so that's a ton of stuff. The whole market, the idea with call options, AMC buy request. Um, what did I do? Like, yeah, not investment advice, all that stuff. All right, cheers. Yeah, good luck, and I'm gonna go to the beach. I'm in Key West.